All right, guys. So again, I wanted to share the Economic Equity Loan Fund with you guys. But for those who are not familiar with VCC, we wanted to give you a snapshot of our mission and vision. So we want to support housing and community development ventures, increase jobs, build sustainable communities by offering flexible financial solutions and products and advisory services. And just to get quick, if for those who are not familiar with VCC, we are a CDFI, a bank, and we have a philanthropic arm where we go into actually communities and partner with them to establish ecosystems and revitalize communities. But a CDFI is a community development financial institution. They are private financial institutions that are dedicated to delivering affordable support to help low income, low wealth individuals, and offer disadvantaged individuals and communities access to capital and also, affordable housing and things like that. So just to kind of give you a broad stroke for those who aren't familiar with CDFIs, that's pretty much what they do. So our vision is to be your first choice with innovative capital and collaborative leadership, promoting vibrant local communities and enhancing the quality of life. And we do this by offering some services. And we can go to the next slide to show you what particular services we offer. And so we offer lending services, advisory services, and investing services. So investing, I mentioned that we have a philanthropic arm. So we do a lot of deposit grants, stock and program related investments. So that's really focused on our locus team, and that's what they do. From an advisory perspective, we do collaborative leadership, business development, technical assistance. As I mentioned, we partner with the Capital Region SBDC, and we actually just hired a team member within the VCC family that focus a lot on technical assistance. And as you guys know on this call and the professionals that work in that space, technical assistance is really key, and business development is really key for the demographic that we're serving. So often they don't have the technical assistance or the business acumen to really prepare for a lending portfolio. So that's where we rely on you guys and our resources to help prepare them. And we'll talk through that as we move forward in the presentation as it relates to economic equity. And then we have our lending arm. We have real estate lending, affordable housing. Of course, my area of expertise is small business, healthy food, and clean energy. So we can go to the next slide. So just to give you a broad stroke of VCC social impact since inception, we've had about 1.92 billion in total impact, and that equates to about 1,450 loan solutions, a little over 8 million in originations. So that equates to about 1,200 projects financed. Of course, we know small business are responsible for hiring and making sure that those individuals in your communities are working and employed. So we've created and maintained a little under 14,000 jobs. And one thing that I like to look at that I think is a proud moment and a point of pride is the little under 33 hours of technical assistant hours. I think that is huge when we're looking at this demographic of small businesses who are looking to get started, just need that business acumen to help them grow. So next slide. So just really looking at the Economic Equity Loan Fund, and I know that's what you guys want to talk about today. So you can have options for solutions to help your cohorts or your clients gain access to financing. So of course, in 2020, with the pandemic, VCC looked at, our swath of programs and projects and services that we have to determine what can we do to provide capital to BIPOC women-owned businesses. And of course, BIPOC is Black, Indigenous, and people of color that were disproportionately affected by COVID. So what we did was we established this Economic Equity Fund, which is a $10 million fund. We're looking at, of course, getting more than that and raising that capital. So it's a $10 million fund that we put aside to provide us capital to, again, the demographics that I shared. And eligibility for the loan is you have to be live in Virginia and been in business for 18 months. We can, in some cases, look at startups. It just really is based on case by case. So for instance, if you are a startup and you're continuing to work and you've been in that field for years and an expert, we will consider that. But again, as a startup, we're going to be relying on the individual personally, looking at their balance sheet, their credit to really make the decision. So that's where we would tend to look at a startup and make that consideration. You want it to be located in Virginia. We are broadening our demographics to look at our partnering in neighboring states. If we want to look at North Carolina, DC, we do a lot of solar in the DC market. And this product is designed for all types of business needs, from acquisition, debt refinance, equipment finance, owner-occupied real estate. We only do owner-occupied real estate for the economic equity. However, we do have our real estate team that will do investment property. But the biggest thing that's not listed here that I wanted to share as far as how the Economic Equity Loan Fund differentiates itself and make capital available to BIPOC and women-owned businesses is that it's three major things that we do with this program. One is loan loss reserve. So that comes into play when there's a shortfall of collateral or a shortfall of the borrower's injection into the project. So with loan loss reserve, we can inject 20% into the deal. So an example of loan loss reserve would be you're purchasing a building for $100,000. So typically you need to put 20% in. So we would ideally only finance 80% of that project. We're looking for the borrower to inject $20,000 into the deal. So what we would do is add loan loss reserve. Say for instance, we'll put $10,000 in from a loan loss reserve perspective. So the borrower only has to bring $10,000 to the table. That doesn't mean that you're borrowing $80,000. You're still responsible for the $90,000 repayment on the loan. So that's one enhancement that we have with regards to loan loss reserve. Another one that I think is huge is debt service coverage. In most traditional financial institutions, you're looking at a DSCR, debt service coverage, of 1.20, which equates to, for every dollar you spend, your business needs to make $1.20. Well, with the Economic Equity Loan Fund, we've dropped that to 0.90. So we're saying you don't even have to make $1 to dollar, right? So that is huge when it comes to revenues and capital that the business may or may not have, right? So that's another enhancement. The third enhancement that we have is our credit score. Of course, most of our partners in this space want at least a 700 or better. We would go as low as a 650 credit score. And if it's less than that, we still have put some things in place to help mitigate those challenges. So if it's less than 650, within the last 12 months, we say we don't want any late payments. So that's really looking at a back look at COVID. They may have had some issues in 2020, 2021 on the rise, and now they're a year in and they've recovered. So if they have no past due payments in the last 12 months, no delinquencies on their record, no public records like judgments, collections, tax liens. We would even look at a bankruptcy as long as it's off in the last 5 years. Of course, no charge-off accounts and things of that nature. So we've really, really done a good job, and we're still in the process of tweaking some of the requirements as it relates to credit, because so often you may have someone who co-signed for their son. They may have had perfect credit, but they co-signed on a vehicle for their child, and for some reason their child didn't pay, they didn't tell the parent, and they have a repo on their credit report. Well, that's an isolated incident, so we can take a look at that and still make that loan decision because everything else on that credit is impeccable. So these are some enhancements that we've done to the Economic Equity Loan Fund that I think has been a game changer for a lot of our BIPOC and women-owned businesses. And we're still tweaking it as we go along to uncover what some of the challenges to get capital in the hands of those individuals. And then the last slide, just for your benefit, if you have someone that you're either referring or someone that on the line is interested in a loan with VCC as it relates to the Economic Equity Fund, these are some financial documents that I'm sure that are not any surprise to a lot of you on the phone. Of course, we're looking at the last 3 years of business tax returns. And word to the wise, make sure you have a good CPA, a good bookkeeper that's really showing revenue, right, for the business. So often I hear individuals say, oh, you can look at my bank account and see how much money I make, here are my bank statements. Well, of course, the first area of repayment or first source of repayment for loans are cash flow. So the only way we can determine what your cash flow is if we know what your tax returns look like, right? And adding back your depreciation and interest to get to that bottom line of cash flow, to know that you have the debt service coverage to repay the loan. So make sure that you have an accountant or bookkeeper that's showing true revenues. We want to make sure that you're earning income, that you're not showing a loss each year, because that gets difficult for us to make the credit decision. And of course, the most recent interim financials, that's your balance sheets, your profit and loss statement, sometimes referred to as an income statement, your accounts receivables and your account payables aging. Of course, we want to know, are you getting paid on time? Is it taking 60 days for you to get payment from your clients? And then are you paying on time? So those are going to help us understand what your cash flow looks like and help us mitigate, again, if you have revenue and the cash flow to make the loan payment. Background information, history of the business. This is usually indicative of new businesses. In addition, we'll look for a business plan, but it's also if you are a seasoned business and you're adding an additional product stream or service that you had before, and hence you're coming to us to borrow to launch that particular product. So we want to know where you are. You want the 2 years projections on that. And I also tell clients, please give me some history of who you are. Oh, I'm a relationship banker, so I'm going to ask, how did you get into this? Tell me what sparked you to start your own business, for us to understand what industry experience do you have? Are you an expert in the field? How can you mitigate maybe some pitfalls in the industry, and how you're going to differentiate yourself from your competitors? All that information goes into that background and the history of the business. And if you've gotten recognized or got awards, we want to know that, because that helps tell the story and speaks to the character of the individual. Of course, we're looking at a personal financial statement. This gives us a snapshot of your assets and liabilities, because all of our loans are guaranteed by the borrower. So that gives us a snapshot of where's the cash injection coming from for the loan. Again, your skin in the game. We're not going to finance 100% of the deal, as I mentioned in the prior example of loan loss reserve and your contribution and your borrower's equity. The personal financial statements gives us a snapshot of where your money is to inject into the project. And then, of course, your 3 years personal tax returns. Again, we're going to look at you as the borrower. And we actually look at a global debt service coverage, again, for those folks who are startups who don't have a backlook of how the businesses perform. So we look at you personally, what is your debt service coverage, the business, and then we do a global analysis, because sometimes we have to make the deal work and look at a global analysis, because the numbers may work globally, especially if you're continuing to work while launching the business. We can account for that income into the credit decision. So we're trying to do all we can, so at the end of the day, we can mitigate risk, and that's the name of the game. How can we mitigate risk to make sure that you'll make payments on the loan? Because a debt instrument basically is your promise to pay regardless of performance. So those are the steps that we take to analyze the financials to make sure that the credit decision is going to be sound and we've mitigated risk in order for the borrower to pay back.
Well, thank you so much for joining us today to help with that
Welcome.
purpose of sharing the information.
Awesome. Thank you guys. Have a good rest of your day.